Costco Wholesale operates an international chain of membership warehouses. The company offers a wide range of products, including grocery, electronics, clothing, and household goods. Costco is known for its low prices and bulk sales model, which attracts loyal customer base. So it has a dividend yield of 0.6% and a market cap of around 360 billion and a payout ratio of 32%. I would like to take a look at the financial foundation. For me, it's important that the company has a revenue growth, a free cash flow yield over 4%, because the free cash flow yield is used to pay out the dividend and to pay the buyback of shares. Also, free cash flow growth is important, and the debt free cash flow ratio should be under 5. So this is how long we have to pay the debt with our free cash flow. And the shares outstanding should decrease. Of course, at some companies it's increasing if the company is still young, but the older companies should already buy back shares. So let's take a look at the revenue. So we can see the revenue increased over the years, also in a very good rate, close to 10%. Now in 2023, the growth rate is not so high that it used to be, but it's still good. So that would be a check at the revenue growth. So the next thing would be free cash flow yield over 4%. So we have to take a look at the cash flow. And as we can see, that would be around 6.7%. So the next thing we are looking for would be the free cash flow yield over 4%. So if we look the 2023, it would be 6.75 billion free cash flow. So we can calculate that. Then we also need the market cap. You can find that as well. So the market cap is, that we already know, 361 billion. So if we calculate that together, how much it would be. So that's actually just 0.0186. This means 1.86%, and that's not a check mark, there's an X. Yeah, it's a low free cash flow yield actually. So this is how they pay the dividend and how they pay the stock buybacks. So that's not great. This can show the high valuation. So the next thing we are looking for would be free cash flow growth. So let's take a look. So the free cash flow did grow over the years. This is from 2019, and it did increase. It decreased sometime, but overall it increased, and that's good. So that would be also the check mark. So now something really important for me is about the debt and free cash flow. So we want to see how much debt this company has. So we take a look in the balance sheet. And then we want to see that the debt is under, like the debt to free cash flow is under 5. So this would mean if we take all our free cash flow, it would take us under 5 years to pay the debt. So let's take a look here. So I would say we use the long-term debt. This is actually very low. even with excluded capitalized leases. So actually we could take this one, but let's say we take just the long-term debt, it would be 9.11 billion. So obviously we can already calculate it. Divided by our free cash flow. This would be 1.34. So this is actually really, really good because it would take us a little bit over 1 year to pay our debt with our free cash flow. So this is definitely the check. And that's great. But we can also take a look at the cash on hand because that's also interesting. And this is even greater because we can see they have a lot of cash on hand, over 15 billion. So actually they can already pay back all the debt with the cash on hand they have. So really, really good. So the next thing we are looking for is shares outstanding. So actually we want the shares outstanding to decrease because this means the company buys back their own shares. So this means the stock price will also increase because we have less shares outstanding. As we can see, they didn't buy back shares. Actually, the shares increased over the years. This is not great, but also not necessarily horrible because the stock price is also quite expensive. So if they buy back shares, it would mean they buy back expensive shares. So it's not a check mark, but it's not horrible actually. I would like to take a look at pros and cons of the Costco companies. So what are their opportunities, but also what are their risks? Let's take a look at the pros. So the first thing would be consistent financial performance. So they have a consistent revenue growth and a consistent profitability as well. So that's a great thing. The second pro would be membership model. So the membership fees provide a stable and recurring revenue stream. So they also have a very high renewal rates. So it means when the membership run out, the most people, they will renew the membership. They also have a high brand loyalty. So many people really like their products and they will stay loyal to the brand and to the company and will come again and again to purchase what they need. The next thing would be low cost leadership. So Costco bulk purchasing and efficient supply chain management allow it to offer competitive prices. So they also sell the big volume of products in a big size. So this makes the cost go down for the customer. The next thing would be strong balance sheet. We already talked about this. They have great cash on hand and they have a low debt. So this is very good. I like that. The next thing would be expansion opportunities. So they are mainly focused on America right now, but they still have a lot of international growth. They can go to many countries and could potentially be a dominant position in other countries. So also the investment in e-commerce is a opportunity for them. So let's talk about the cons. So the first cons would be high valuation. So Costco is trading at a high PE ratio. We can also see that at the free cash flow yield because that's quite low. So the high valuation is definitely a concerning thing. So second would be low margins. Despite strong sales, Costco operates on a thin profit margin due to its low price strategy, leaving less room for error in cost management. So third would be intense competition. So we do have intense competition in the retailers. We have Walmart and Sam's Club, but also online retailers like Amazon and many other supermarkets is fighting for their dominant position. So my conclusion is Costco is a great company with a strong market position, but personally I feel they are overvalued right now. So I think they could be a good value at around free cash flow yield of 3%. So this would mean they have to drop a lot in stock price to come to 3% free cash flow yield, or they have to earn more free cash flow in the future. But for me right now, it's not a buy.